BeyondMystic, and welcome to this precious metals report today. The title of this episode is Options Expiration with Craig HEMKE. You can find his work at tfmetals.com. He's a very talented guy, and he's also the leader of a galaxy far, far away, Mr. Lord HEMKE and his two henchmen there. And on his spare time, he also likes to manage a casino in Vegas. Mr. HEMKE, welcome back to the show.
How are you today, JC? Terry Benedict, it didn't come out very well.
It's not too bad. It's not too bad. You're a little rusty. You haven't been on the show for a while.
You know what else I get all the time? People say that dude looks like, or at least they say young Robert De Niro. They don't say like current Robert De Niro.
Yeah, he's looking weird these days. Yeah, you kind of look like.
I don't know. But I get it. Like even out in public, people say, "If I ever tell you look like Robert?" Yeah, I don't know. So anyway, you can call me Bob.
That's pretty cool.
Put Bob De Niro down there instead of all-knowing seer. I'll do that next time.
Bob De Niro.
I'll do that next time.
Yeah, that would be cool. That would be cool. Hey, well, Greg, thank you so much for being on the show, man. I haven't seen you in a while. There's a lot going on, of course, this week, and we have about 30 minutes today, 35 minutes to update the audience here. I wanted to start here on this boiling frog routine. Janet Yellen, of course, was speaking to the nation and lying about inflation. Imagine that. How do you want to set this up here before we get into the options expiry and this whole narrative right now of the boiling frog and basically the gaslighting of not just Americans, but people around the world of the fact that disinflation is just transitory and there's nothing to see here, basically.
Right.
How do you want to set that up here?
Well, I could talk about that for the next 30 minutes. We can just sign off.
Okay.
But the frog in a pot's an excellent metaphor, really, for everything. I mean, you just go back to 2 years ago. Okay, it's almost Thanksgiving here in the States. And I remember 2 years ago, we had a house full of people. It was great, right?
Mm-hmm.
And you think of how the world looks now, 2 years later, you know, what you can and can't do, the rights and freedoms that people have given away, you know, and it's just madness. Yeah. And this central bank stuff and what's going on with inflation, you know, is just part of it.
Mm-hmm.
So I really, boy, next year, I mean, here we are wrapping up 2021, and this has been God, JC, what's 2022 going to be like? It's another election year here in the U.S., right? With
midterms.
I only imagine how bad things are going to get again.
Well, here's the thing, too. We were promised it was going to get better after everybody got the thing, and we got all our paperwork in order. And look at this. This is Ireland. Today, going back on partial lockdown, even though they're at 93%, I'll just say compliance here. So it's not getting better anytime soon if you're looking at the model that's being presented here around the world. It's absolutely crazy.
And or the news, what was Gibraltar, 100%? Where they're like, there's nobody that's not vaccinated. And yet this case, I mean, I can't, look, I don't want to get sidetracked on this crap, but so that they're forcing this shot upon you that makes you make antibodies for a spike protein on the virus, that particular form of the virus is now extinct. It's not even around anymore. Everything's just Delta and all these other mutations. I mean, it's just, oh my God. Anyway, but that's how they've always done it, man. Read up on Fauci. You should go back to
watch out, Craig. You're using a lot of key words that might get us in trouble here. But I know what you're saying. It's absolutely crazy. We'll just end with this one here. This is Italy.
About that.
Check this out.
Anyway,
this is Italy here. Hold on. Sorry, I didn't mean to speak over you. I think we have a little bit of a lag time. But this is Italy here now proposing to lock up people who didn't get the thing. It's just absolutely ridiculous.
Right. Austria is the same way. All right, we're not going to talk about that because we won't
get All right. What the hell's going on with the economy here?
The stuff that people have been scared into, the freedoms they've been scared into giving away, right? I mean, the line comes to mind, about freedom and liberty, and you can't have safety and liberty, or whatever that one. I'm getting too old to remember all this stuff. But anyway, it's the same thing. I mean, that's how we've gotten to where we are. So we'll leave it at that. In terms of inflation, to get back to your original question, JC, and this is all part of why the precious metals have had such a challenging year. I mean, gold is down 2.5% year to date. I think we started in 1906. We've seen all this inflation. We've seen record low real interest rates, right? Your inflation adjusted interest rates. Those are typically the tightest correlation to gold prices that we have.
Yeah.
Real interest rate, inflation adjusted interest rates go down, gold prices go up. And then the opposite is true. And this year that hasn't happened. Why? Because the market participants, if you will, the hedge funds and stuff that buy the actual futures contracts that are still allowed to set price, they've been convinced that this inflation is transitory. Oh, and if the inflation is transitory, then this dip in real yields is transitory too. So what's finally coming around now is this understanding that it's not nonsense. Now, this is a structural thing. I just read today an article about how money velocity is starting to pick up.
Yep.
Okay, well, that's something that all the deflationists have talked about for a decade. Well, there's not going to be inflation as long as velocity. Okay, well, now you've got all this money printing and all these, all the cash has been handed out, and now velocity is picking up too. You've got the supply chain problems, the bottlenecks everywhere, where you can't make, maybe there's 1,000 parts in your washing machine, but you can't make it without all 1,000, right? So,
yeah.
All of these things they're just not going away. Everyone was all excited about the CPI last week at 6.2%, but the PPI, the producer price index, is annualizing more than 9. And it's those producers that then either they're going to get their margins squeezed and start, losing money and going out of business, or they got to pass those higher input costs along. So anyway, that's the notion that of transitory that people are now starting to figure out is total BS. And as this, this awakening continues into next year, we're probably going to see gold and silver rush to catch up in the gains that they, haven't made so far year to date. One more thing we should talk about, is what's going to happen with the Fed too. I mean, there's a lot of doubt about which direction they're going to go in 2022.
Well, here in Canada, at least, they're telecasting here. Let me bring that up just a couple of days ago, that they're just about ready to raise rates. I'm like, okay, that's very interesting. Whereas everybody else is talking about tightening again. So what's your guess there in the States? What's the lingo over there? How does the economy work?
They're trying to play the same game that they played from 13 to 18. Remember, and this even baffled me and got me wrong-footed back in 2012. The Ben Bernanke, as we used to call him, came out in October of 2012 and announced another $1 trillion of QE called QE3. It was like, okay, now we're off to the races. Well, the problem was, as they devalued the dollar, all the other fiat currency were devaluing even faster. From the Bank of Japan, the ECB, and the rest. And so then the dollar suddenly went up as they started, letting that run out, and everything collapsed instead. It didn't matter, that all of the currencies had been diluted. It's just that the dollar had been diluted less quickly as the others, and so all of a sudden it appeared stronger. So that's the game they're trying to play again. From 13 to 18, what they trim like $700 billion or something off the Fed's balance sheet, and tried to gradually let rates go up. And the 10-year got to 3% about this time 3 years ago in 2018. Man, everything seized up and collapsed. The stock market fell like 20%. And that's when everything changed. That's when real interest rates peaked from a positive and started trending down. The Fed eventually formally changed policy and started cutting rates in June of 19. And we've been rolling higher and everything ever since. So they're going to try to play the same game. They're not going to be able to do it for 5 years this time. They'll be lucky to do it for 5 months.
Right. Well, let's get into the kicking of the can here. I had an interview with Rob Kirby yesterday, and I was talking to him about the Evergrande bond situation. And he gave me a different perspective that I hadn't heard before. He says, in 2007-8, it was the AAA rating bonds that failed. That had never happened in history. And he says they were able to paper over that. This time, when you think of Evergrande, I think the last I checked of the ratings, they were at a C rating. He says it's not a AAA. He wasn't suggesting that it wasn't an issue, but that perhaps it wasn't the biggest issue on the screen right now. There are things happening that are all kind of percolating together here for this culminating event that appears to be just on our doorstep now. So I wonder, what are your thoughts on Evergrande and how perhaps those bonds tie into everything that's happening now?
Well, it's hard to say, right? Because we're talking within the Chinese system. I've seen, a handful of banks that own some of that Evergrande debt. Maybe UBS was one of them and a couple others. But it's not really the whole daisy chain thing of the financial crisis, where one bank was somebody else's counterparty and then that bank was someone else's counterparty of all those credit default swaps and everything it went with. So I don't know. I think maybe Evergrande's more a symptom, of how this could all begin to unravel. Another thing I saw just recently, maybe it was last night, Tuesday or Wednesday night, and that was duration risk, which is a bond trader's term that Rob would know well. And that's so many, whether they're hedge funds or institutions, insurance companies, pension funds, and the rest, have gone way out on the curve, trying to get any yield possible, right? I mean, the short-term stuff is under 1%. I mean, that's why even high yield is like the lowest average yield it's ever been, like at 4%.
Right.
And so, but if you're way out there buying 10 and 20-year paper at 2%, okay, and then interest rates go up, the price of your actual bond falls dramatically. And if you're an institution that has to mark that to market, okay, and I mean, this is kind of what happened in the financial crisis. All those tranches of credit default swaps, or I'm sorry, credit mortgage obligations, CMOs, collateralized mortgage obligations, they all basically went to zero. And so if you were to mark those at zero on your balance sheet, a lot of places suddenly became upside down. Okay. That's why one of the first things they did in 2009 was change the accounting rules. GAAP did that and said, you can mark them to maturity instead. So you don't have to carry them. Yeah. I mean, that was a huge controversy back in 2009 when they did that. Right. But now it's okay. Now just think of that problem.
I wish I can mark my house to maturity when I'm trying to apply for a new credit line. Yeah, that would be nice.
Or all my gold.
Yeah.
I'm going to mark it to the day that the pool collapses. I don't think anybody's going to take me up on it. But that's so again. So now think of back then it was this much, and now it's like this much. How much is in that funnel of either investment grade, high yield, whatever debt. And so if you got 20, 30-year paper with a coupon of 2 or 3%, and all of a sudden rates spike to 3%, I mean, the price on that's going to fall, like 70 cents on the dollar. And so all these institutions end up having to mark that, and so anyway, all of this augurs for why rates cannot go up. Another thing I saw recently, JC, was total interest on the national debt. They've been able to, the Treasury Department has been able to rig the average interest rate that is paid to down near 1%, like 1.5% on $30 trillion, right? Yeah. So you're paying $450, $500 billion a year in interest. Well, what if that goes to 3? Now you're paying $900 billion, $1 trillion a year in interest. The whole thing just,
yeah.
Okay. So anyway, the Fed can play these games, and they're trying to convince everybody again, like they did from 13 to 18. Oh yes, we're going to, do this and stop QE. Right.
And apparently the market is sniffing it out. There's something happening here, and we'll get into the COMEX here, but we're seeing a number of people standing for deliveries like never before. We're seeing tightness in the market right now. If you talk to Andy Scheckman here, there's some weird things happening with the RCM and also here the US Mint in the States. So what's happening there? And what's this category of others on the COMEX here taking delivery? Do you know anything about that? And how can we kind of navigate this nebulous weird paper game they're playing there?
Yeah, there's so many parts to the opaque picture, right? It's deliberately done that way. It's like exchanges for physical.
Yeah.
I remember that. I mean, I've been tracking that for 4 years, and I'm up to like 7 million contracts. That's like 700 million ounces. What? And all that is a shenanigan of a bank trader arbitraging the difference between spot and the front month and fiddling with it. That's all they're doing. And so there's another part of the opaque process that benefits the banks, right? That monopolistically control the scheme.
Right.
But it doesn't really determine the price at all. So what are others? I don't know. Folks that take delivery that don't fit into a pre-described category.
Right.
It's like the non-reportable traders are. Well, what are they? That's not just like me and you.
Yeah.
Who fits in that category? Is that some of the offshore hedge funds that JP Morgan, other banks run? That aren't counted. Who knows? But it's there's I guess, a bigger picture here that I find intriguing. And we talked about supply chains and bottlenecks and all this stuff, and everybody's seen the pictures of not only LA, but like Singapore and Hong Kong and all these other places where all the, the ships are anchored out off, not coming into the port and everything else that's going on. Mm-hmm. And think about, if you're short a part on a washing machine, and so your assembly line comes to a halt, mm-hmm. What happens if your mill breaks down?
Yeah.
And you can't get the whatever part to keep running your mill, well, then your production of your mining company, at your mining company falls apart. And mm-hmm. So what I think is a more interesting trend you mentioned with Andy, what he's seeing in silver. And I saw something just this morning about somebody talking about manufacturers in India just queuing up to get as much physical silver as they can while they can. Mm-hmm. And we're actually seeing that, it seems, play out in London. There was a tweet floating around I saw yesterday of a chart of every single base metal that's traded at the LME, the London Metals Exchange, is currently in backwardation. Okay, so copper, tin, mm-hmm. aluminium, as Alistair McLeod says,
aluminium,
zinc, lead, you name it. Okay, they're all in backwardation. Well, what does that mean? That means the spot price is higher than the futures price. It shouldn't be that way. And when it gets that way, that is a shortage. People, I want it now. I want it now. And they're bidding up spot because they want it right now. Mm-hmm. They're not taking, I'm not waiting 90 days from now. I want it now. Mm-hmm. And so, we've seen that play out in these base metals. You could, everybody considers silver to be a base metal, right? Mm-hmm. Oh, it's not money. Right. Industrial metal. So when's that going to happen in silver? What all of the steel, cold rolled steel, iron ore, zinc, fertilizer price. I mean, you name it. All these, so many of these things have doubled and tripled in the last year because they've got in short supply.
Right. But talking about that backwardation and where people are saying, hey, I want it now, I want it now. I had this interview with Bill Holter 2 weeks ago, and he's saying also that his clients are calling him and they're like, hey, where can I wire my money now? Today, I'll wire the money today. I don't want to keep this money here. Just send me the silver, but I want to get rid of this paper, basically, is what people are telling him. What's the correlation there also to people maybe waking up to this?
It doesn't take much. I mean, that's anecdotal, and you think, okay, if you apply that, it's like the silver squeeze back in February, all of a sudden you get everybody buying silver at once, right? And all of a sudden they're in it. Think of the most interesting thing to me about silver has always been, on average, maybe they pull out of the ground globally, right? Don't think about, how much silver actually leaves China or Russia and places like that. But globally, it's about 850 million ounces, just to keep the math easy. Yeah. And then from recycling, and reclaimed silver, that's maybe, let's call another 150 million ounces. You got 1 billion ounces a year, okay, of silver that's readily available. Otherwise, you're running into, a supply shortage. Right. Well, on average, industrial use is about 550 million to 600 million ounces and rising, because, solar panels and batteries and, everything else that you use silver for. But investment demand then chews up the rest, or it doesn't. So if you got 1 billion ounces and you got 600 million being used by industry, well, if all of a sudden investment demand is greater than 400 million ounces, well, then all of a sudden you're running a supply deficit.
You got a problem, yeah.
Right. Now there are apologists and shills that say, oh no, there's billions of ounces laying around in grandma's silverware and candlesticks and crap like that. Well, you know what? Probably not at $25. Mm-hmm. Okay, in a moment's notice, over the course of a month, right? Things really get crazy. So anyway,
and I don't think grandma has that much silver yet, too. I mean, we had these campaigns in the 90s and early 2000s. Get your junk silver in. There's very few of that left.
Right. So I just think that dynamic I've always thought that to be profound. And so even as price, I mean, I've been doing this JC now for almost a dozen years, and I've had on my side, I've had JM Bullion as a sponsor for as long as I can remember, an advertiser. And this is probably true at every place, but I just happened to be on their site a couple of weeks ago buying some more silver. And they actually have a record. I can actually look, if I'm logged in, they record all of my purchases.
Yeah.
So I can go back like to 2013 and do the math and say, wow, I paid $16 then, and I've got some I paid 17, I got some I paid 14.
Right.
And I've always done that. I mean, my cost basis must be, I don't know, 17 or 18 now, because I've always believed eventually, whether the system as it's way it's priced eventually collapses under its own weight of deceit and fraud, or whether it's just simply supply demand, that the dynamic is pretty. It's like your Bitcoin thing that I see swirling in the corner of the page. That's why I bought Bitcoin 5 years ago, because I was like, if every 4 years the amount of available supply gets cut in half while demand is increasing, how does that not work? And that's kind of the same story extended. You can do that to just about anything.
Hold on a second here. My dog was barking just as we were speaking. Okay. The mailman, I think, was passing.
What kind of dog you got, JC?
I have a German Shepherd.
I was going to say, you don't strike me as like a little yip dog.
A little poodle guy. No, I have a German Shepherd, and she's a police dog too. So nice. Yeah. She does her job well, but sometimes when I'm doing a show, it's a little frustrating.
Yeah, that's awesome.
It's always at the wrong, inopportune time. Okay, let's get into this story of option expiration here. Mm-hmm. What's going on here? What's indicating? Well, I did a show. Let me just backtrack here. About 2 months ago, with Cliff High and David Morgan, the Silver Guru. And I asked those guys, why is this time different? We've been talking about this for years now. There's people on the screen saying, hey, there's an issue here. Eventually, there's something that's going to crack. And the government seems to be able to kick the can down the road over and over and over again. And I asked those guys, why is this time different? You and I have just talked about a few items here of why it's different in the world, but what's happening specifically with options expiry that it gives you a hint that maybe there's something else here happening and brewing behind the scenes?
Well, this is actually, in terms of what's going on this week and next, nothing is different. Again, think of, you got to have a market, right? Mm-hmm. In an option, there's an option writer, somebody that provides that liquidity, and then there's an option buyer, and then the thing's out there in the world and it buys and sells, but there's somebody on the hook originally, not for every single contract, right? Because they get sold, but there's somebody, the option writer is on the hook. And so it would benefit, and a lot of times it's the bullion bank traders that make those markets that get on the hook, when they issue a call. Yeah. So as you approach option expiration, and I've been doing this for a decade now. Maybe once a year out of the 5 or 6 front months that go off the board, maybe once a year, price it doesn't like get magnetized to a certain level, right? That the banks want, but most of the time it does. And what I mean by that is, like, you can look right now, Jean-Claude, those things I sent you. You want to put one up? Yep. I've got the puts up here. Put up the one that says calls. Calls first. Okay. All right. So this is the December 21 COMEX gold. That is the front month. It has been the front month really since August. Think of it in the calendar. There's 6 months a year where all of the trading, all the futures activity, all the volume, all the liquidity resides. And then once that contract goes off the board, whoever still holds it goes into this charade of physical delivery. Right. It's February, April, June, August, October, and December. Well, actually, October is kind of an afterthought. When you come out of August, which goes off the board at the end of July, all the trading shifts into December. Okay, so you got like whatever that till the end of November. So you've got 4 months, really. Mm-hmm. Okay, where all the action, all the contract open interest, primarily almost all of the option open interest is in December. So now we're coming up to the end of November where the options are going to expire, okay, in price. And then the contract's going to go off the board and into the delivery phase during the month of December. Well, that contract goes off the board probably on the 29th, which is a week from this coming Monday. Yeah. I think that's the right day. Because usually one day before the last day of the month. Yeah, because the 30th would be the Tuesday is the last. That's like first notice day, probably. Yeah. Yeah. That's when it's anyway, that's a whole list. Anyway, the options, because of the Thanksgiving holiday here in the US next week, the options actually expire on Tuesday. Okay. We're recording this on the 18th. It's Tuesday, the 23rd. Yeah. That means there's Friday, Monday, and Tuesday, 3 trading days left after today. What you're seeing on the screen here is a total amount of option open interest at all the different strike prices that you can buy. Okay, look, I'm not going to go into like an options trading course and explain what this means, but the one I put a box around there is 1850.
Yeah.
On Tuesday at the COMEX close, if the price of December gold closes at 1851 that day, those things are what's called in the money by $1. And so all of those options are worth $1, and they all represent 100 ounces. And so they're all worth $100. They close at 1852 that day, they're up, that's worth $200. They close at 1870 that day, they're worth $2,000 a piece. And you settle them out in cash. So someone's got to pay that cash, right?
Mm-hmm.
All right. Now look at see the total open interest there. That's a total amount of contracts open as of last night. What is it? I can't have my glasses on. Was it 15,000?
15,373.
Okay. Now put up the other one. Show how many puts there are. Now a put is in the money of prices below 1850, 2000. So if the banks want to find a sweet spot where they have to pay out as little money as possible on Tuesday, what if you drop the price, you rigged it lower to close right around 1850, maybe even $1 below? Because if you close price at 1849 on Tuesday, the 15,000 whatever calls at 1850 are all worthless. Now you put these 2,000 1850 puts into the money, but only by $1. Big deal. So there is obviously an incentive in the short term to not let price keep running higher, right? And actually get it down closer to this sweet spot.
Right.
Okay. This happens, like I said, every other month. I mean, just like clockwork. You can watch this. Now, anything can happen. Maybe Biden announces Lael Brainerd as Fed chair over the weekend, and you come in Monday and gold spikes to $1,900, or a shooting war starts in Ukraine. I mean, anything can happen. It can still screw the banks on this deal. But this is obviously what they're trying to do, even as we record this today.
Right.
The dollar's down, interest rates are down, gold should be up, gold's down $10. This is just how it works. And people say, oh, you're crazy. Yeah, right. There was just news 3 days ago about, what was it? Credit Suisse and Scotiabank. I can't remember who the banks were this time, having to pay $50 million in fines for manipulating price of the gold fix.
Yeah. Imagine that. No, but there's no manipulation.
Right. Which is the same thing. You're using the futures price to impact a certain spot price at a certain time of the day. Here they're using futures to impact a certain price on a certain day, building toward trying to get it down, closer to 8. Then again, go back to the call one. Again, notice, put the put one back up again real quick. I'm sorry.
No problem. Yeah.
Notice now, if you scroll down, look at there's hardly any open interest in puts as you go up.
Yeah.
Right? Okay.
Yep.
So as you go up in price, you're hardly putting, any puts. I mean, you're hardly putting more puts deeper into the money. Okay. There's 20 of them, 200, that sort of thing.
Yeah.
Now put up the calls. If you go up in price, look at how many calls suddenly are in the money. Go down. I don't know how far I shot it. Anybody can look this up. I mean,
at 1880, you're at 5,000.
Right.
Yeah.
Do you think they want price to go to 1885 by the close on Tuesday? So as they work price down, all of those calls you see there get taken out of the money and are worthless. Now you put some puts in the money, like I said. It's not like a zero, but still.
Yeah. So
this is not complicated. Can you make money trading this? If you want. I mean, I just gave up fighting these guys a long time ago. But this is how it works. The other thing too, JC, that's important, third Friday of every month, all the New York Stock Exchange options expire too. Okay. Tomorrow, the 19th, is the third Friday of November. So now we got options on the GLD and the SLV, and all these other ETFs and mining shares. And it's more skewed toward the calls, as I showed you, because of the rally over the past month. Because no one's, if you're buying puts, you were probably buying them, 6 weeks ago when you thought price was going below 1,700.
Right.
And this price has rallied over the last couple of weeks. People have been buying calls. They go, they don't like to buy duration because it costs too much. So they buy the front month, the November ones and the December ones. And it just leaves you rife for this kind of manipulation. That's exactly what you got to deal with. Again, it'll go away. It'll be over with soon enough.
Mm-hmm.
But anyway, you want to talk about the dynamics of it. That's in a nutshell how
it's pretty crazy when you start looking at it, and people wonder why, nothing ever happens. Well, there's all of this manipulation behind the screen, and who's paying for all of this too? Rob always gets in trouble when he starts talking about the ESF and other players, but this is the nature of our game here. We're not in a free market.
No.
And when people ask me, well, what's the price of silver going to be in 2 months and then 3 months? I'm like, do you really care? Is that the right question? Or do you want to have wealth in your hands as opposed to this paper dollar they're admitting every day now? They're hyperinflating. And even with their numbers that they're admitting to, it's absolutely mind-boggling. And at the same time, we're seeing everybody around the world are starting to de-dollarize. You mentioned Bitcoin, the spinny thing over me. Rob Kirby and also Cliff High, in his last interview here with Greg Under, let me put that up, he was opining that perhaps we're already seeing international trade being settled in crypto. So there's already this big move away from dollar-centric trade. And that could be very interesting here moving forward as well. And we're trying to obfuscate that, of course, with all the news and the fear, uncertainty, and doubt about banning Bitcoin mining and all of these things. But clearly something is happening behind the scenes. And it's for the audience to decide, well, where do I go? What do I do? Let me put up this tweet by David Morgan. I thought it was absolutely apropos. And Andy Schexman tells me this all the time. He says, well, okay, well, where do you put your money in these crazy times? And people are saying, well, do I go to bonds then? Do I go to Bitcoin? And then you see the big silver elephant in the back of the room. Why are you so still a silver bug in these times?
For the reasons that we talked about earlier. I mean, it just, in the end, there's going to be more demand than there is supply. Yeah. And since I understand how the pricing mechanism works, and this works for gold too. Jean-Claude is I guess a history buff. I know how we've gotten into this position. The world tried to meet gold demand through actual just physical metal through 1968. And then that wasn't working anymore. And then Nixon closed the gold window.
And here we are 50 years later.
Right. At the end of 1974, actually January 1, 1975, gold futures began trading as a substitute, as a synthetic substitute for the real thing. And now we've got gold futures, we got options, we got unallocated accounts, we got ETFs, we've got all this phony baloney stuff that just gives you exposure, but not the real thing. So I've always been safe with in my mind with the notion that, even without a revolution, even without the pendulum swinging all the way back to sound money, the world will one day wake up. You may think you own gold because you own GLD or something, but you don't. And what I always reassure people on my site, whenever gold's getting waxed, because it does from time to time, that okay, the price is down, but the value of it's not down. And the value of it every day is higher. It's more valuable. And that's, I think, the right way to look at it.
And I think in the conversation too, sometimes when I say I'm buying silver and I'm catching myself, I'm like, I ain't buying anything. I'm just giving back their paper IOUs to get the real thing. So that's where I want the audience also to think about this. They're not buying silver. They're returning the paper IOU that these guys are printing out of thin air for your actual wealth. At some point, it will pay out. It is your wealth in your possession. That's the whole point here. Hey, Jenny Alicia is on the chat and she says, I love Turd Ferguson Metals Report. I won a subscription and the summertime I learned so much. Let's talk about that. What do you have on the product here at tfmetals.report.com here for the audience, and talk about also perhaps how you can guide them, seeing as you've been doing this analysis for so long. You can see this clockwork repetition, and in that there are opportunities to buy when you know that these guys are going to be hammering the prices, so to speak. So how are you and your audience members here benefiting from all of this analysis?
Well, like you said, it has been, and thank you for asking, JC. It has been, I just celebrated my 11th year. We started 11/11/2010. That picture you have of me was before I started.
You're a little wet behind the ears.
Yeah, that was pre-TFMR right there, brother.
Right.
It's like they got dog ears and cat ears, and there are gold ears. And I have definitely
I'm
been.
gonna have you send me a good head and shoulder shot with that new hairdo you have. It's pretty cool. I'll make a new poster for it next time you're on.
But anyway, my site is different. It's not a trading site. People come and go thinking that I'm going to sit there and tell them, well, we're going to swing here and we're going to pivot there and all that. Man, if you're going to play in the casino, which is what it is, rigged against you by the banks, just like a casino is rigged against you by the people that own the casino.
Yeah.
There's other people that can do that. They can count their waves and Fibonacci levels and all the other jazz.
Yeah.
If you're truly going to be interested in the precious metals, man, you got to follow everything. I alluded earlier to geopolitics, or is Lael Brainerd going to replace Powell as Fed chair? Biden's going to announce that in the next week.
Yeah.
Is inflation actually transitory? What is the political scene? I mean, all this stuff.
Yeah.
And so that's what I try to keep track of. And then all under the umbrella of understanding the prices managed and manipulated by these banks that monopolistically control the market.
Mm-hmm.
So if you can put all that together, you get the big picture, the macro right, and then understand things like this option expiration, then I can save you some money.
Yeah.
For what if, say last week, because we started talking about option expiration back on really Monday this week.
Yeah.
What if last week you were thinking about buying some physical silver at 25.50 spot? And I said, yeah, hold off on that 20 ounce. Or at least gave you some information, made you think you might want to hold off on that 20 ounces. And by Tuesday, you could buy it at 24.50 spot. Well, I just saved you $20.
Yeah.
And the subscription's only 15 for a month. So that's the main thing we try to do. And then but I'd be remiss if I didn't talk about the community, because there's, all the people that pay to be a part of it, they provide their own information, links to, drill results from a mining company, or links they found.
It's like an army of researchers all helping each other out. Yeah.
Like their own little Wikipedia page, Wikipedia site for the metals. It's just, anyway, I'm just really, really blessed and fortunate that people have decided to use my site in that regard. And I just try to hold up at my end of the bargain with a post in the morning, as you can see on the site, and then a podcast summary every afternoon.
Yeah.
Look at that handsome guy with the short hair.
Yeah, there you go, folks. If you want to try that out, I recommend you do. And of course, Jenny in the chat saying she absolutely loves it and learns a lot there. And that's the whole thing. Getting the big picture here is what is empowering us. The knowledge is power here, because of course, in the outside world, we're seeing this obfuscation, these lies, these manipulation. That's all we get. So in order to navigate our future here, it's nice to come together with other researchers who can tell you the truth of what's going on behind the scenes. So folks, that's tfmetalsreport.com. And there you're looking for the subscribe page. Give it a try. What is it now at $12.08 per month? That's pretty amazing.
If you go annually,
absolutely amazing.
Otherwise, and you can just go month to month, and you can cancel anytime.
Yeah, absolutely.
So but hey, you know what? And it just came to mind. I did a thing with the Wall Street. I think this coupon code is still out there. I did a thing with the Wall Street Silver people last week.
Okay.
Give them a 50% discount coupon code that they could give to their people. You might as well just tell people here too, because it's still in effect.
Let's do it.
If you sign up for a monthly subscription, like I said, $15 a month. But at checkout, you enter the coupon code WSS for Wall Street Silver. You get half off for your first month.
WSS. Let me see.
WSS, Wall Street Silver.
Oh, okay. Sorry, I missed that.
And then, so then you get half off. So 25 cents a day for a month to kind of kick the tires and see if it's worth it. And if you like it, you stick around, you start paying full boat like everybody else. But it's at least a way to.
Right.
I think that set it up that runs through the weekend this weekend.
Okay, and that's right. What I have on the screen, coupon code WSS.
Yeah. If you here click Vault subscription. I'll just show you real quick. See where it says Vault subscription, that little gray box?
Yeah.
Click that. No, not the yellow one.
This one.
Click that. Don't you? Where's
Vault? I can't click, but I can click on this one.
Yeah. That's okay. But anyway, you get in there. You start the process of setting.
Oh, the month-to-month one. Oh, I see what you mean. Okay. Yeah.
Okay. And anyway, you go in there. You set up an account. You pick a username. All that jazz, and then you can subscribe with a credit card, and it's pretty easy to do. So anyway, that's
okay. So folks, I'll make sure with Craig just after the show here, and I'll put the coupon code in the description box below, and I'll also pin that to the comments for you guys. We'll just make sure that all works here, and so give us a few moments after the show, and I'll pin all that stuff up for you guys.
Thank you, Jean-Claude. It really, and that's really what this side is about. I don't, some people like to use what I say for trading. Some people like to like fade it, right? And say, well, God, if he thinks it's a good time to go long, it's time to get short. And that's how I say, hey, whatever works.
To each their own. I mean, to each their own. We're all self-responsible for our finance.
Wherever I'm providing value, it makes me happy. So
yes, exactly. Hey, folks, check us out this afternoon. Andy Sheckman is coming back on the line, also from Miles Franklin. If you're looking for some physical metal here in your possession, check out the last discount codes here for the Beyond Mystic audience. You can find that at beyondmystic.net/silver. Today we have the 2022 Silver Britannias at $395 over spot, and the 22 Silver Maples at $525 over spot. Still pretty cheap compared to the premiums you're going to play elsewhere. So, folks, that was Options Expiry here with Mr. Craig Hemke, Mr. Lord Hemke. We gotta do another show with Jim Willie at some point here. I'll put it on the books for you guys, and we'll try to do something maybe for Christmas for the audience. I think we'd have
that'd be fun.
Good time.
I'm going to remember next time I'm logging in not as all-knowing seer, but as Terry Benedict.
Terry Benedict. Oh, we can do the casino theme too. I'm more than happy to do that with you. All right, folks. Please do go check out our friend here, Craig Ferguson at TF. Craig Hemke at TF. Man, okay, you guys know. TFMetalsReport.com. And please do remember to like, share, and subscribe. And we'll see you this afternoon, folks. Thank you so much for watching. I'm Jean-Claude at Beyond Mystic. Au revoir.